Today we're going to talk about Forex day trading, easy as 1, 2, 3. Stay tuned, traders. We'll be right back. Good day, traders. I'm Stacey Burke from Stacey Burke Trading. Hopefully everybody's trading improved last week and you had a great trading week, either showing improvements from the previous week in terms of your skill set or your approach to the market, your preparation, your planning, whatever that may be. I think this week we are going to have another big week. We're going to talk about that today. I've had a lot of questions, a lot of emails, a tremendous amount of feedback. I'm really grateful for that, and a lot of input into, obviously there's a lot of material and I've maybe underestimated how I've presented that. So I'm going to try and simplify things, and we're going to go over some stuff today which will hopefully be the beginning of maybe simplifying each day's daily currency levels video as well. We're going to add a couple of things to that which may help people just make it even clearer. But today we're going to review our simple 50 pips a day trading system. We're going to talk about structure, high and low of the week, which will help clarify that a bit more. We're going to review some of that in the examples today on the charts. We're going to talk about the high and low of the day and the high and low of the previous sessions. I think that's really going to start to put some pieces of the puzzle together. We're going to talk about the numbers and the timings again. There's been some confusion around this market opens, the 915 and the 12 candle window. We're going to clarify that today. And then we'll talk again a bit about stop loss and profit targets. But also we're going to talk a little bit about the review process in terms of how you can accelerate your learning in terms of actual intentional deep practice. So instead of just looking at charts and making some notes and then going and trading the next day, we're going to accelerate our learning into actually knowing specifically what you're looking for, when and where. And then obviously improving and scaling that up. And number 8, we're going to just talk briefly again about your mindset, aligning your actions and your beliefs so that they're congruent and in alignment with the goals that you're pursuing. So it's one thing to set goals, it's one thing to have positive affirmations, it's one thing to, feel good about what you're doing, but if your actions and your beliefs aren't in alignment in a practical sense, in a live performance sense, then this is still going to be a frustrating process for you, and you're going to go through that meandering process of ups and downs. Even when you hit a new level of learning and performance, you still need to be able to set the bar a bit higher to keep that improvement in your trading, in your personal life, and in your results. So coming back to structure, one of the things that I haven't spent a lot of time talking about, we've talked about geometrical patterns, and I guess I didn't go more into depth about that. Today we're going to talk about 1, 2, 3. 80 to 90% of the time, the high or low of the week will often come in Monday, Tuesday, Wednesday. So there used to be a trading method called the 3-day method. There's all sorts of variations of that, but essentially speaking, by the time Monday, Tuesday, and Wednesday have formed, we will typically have the high or low or both in place for possibly the rest of the week. So when you understand that one of those boundaries may be locked in for the remainder of the week, that can give you a bit more information when you're looking at the market each day, specifically in relation to the highs and lows of the previous sessions. So when we talk about 1, 2, 3, we've talked about 3 pushes, we've talked about the first 3 hours of the session, the market opens, the high and the low. We've talked about the 3-hour rotations. We've talked about the 12 candle window, which is a 3-hour structure. It's very important that you understand 1, 2, 3. So if we have a low and a high in place for the week, for the day, or for the session, that can give you a lot of perspective in terms of what you may be looking for. So last week we talked a bit more about the market setting a high and a low. We're going to talk about the entire day, the rollover, that first 12 candle window, the very first 12 candles when the market rolls over at 5 p.m. New York Eastern Standard Time. I talked about it either being a stop hunt, a continuation, or a consolidation. That applies to every single 3-hour, 3-day rule. 3 sessions. So if we look at our 3 sessions, we'll often find a gain in that first 3-hour window. If we have a high or a low, and we talked about this with the pairs on Friday, I'm going to talk about this every single day now in the daily videos, is that once we have the high and the low in place, the market will either break down or push down, it'll stay into consolidation, or it'll work the top. The same thing applies for our Monday, Tuesday, Wednesday. When we have our 3-day structure in place and potentially we have a high and a low, the market will either stay in a range-bound market, will start to work to one side or work to the low of the week, and again, just to reiterate, we may be inside of a previous week's high and low when this starts, or we could be up high from the previous week, or we could be down low from the previous week. We could have a 2-week structure where we're working the low for a move back up, or working the high for a move back down, or staying in a range-bound market, trading sideways for the remainder of that week. So when we go into the rollover from the previous night's session, we want to know, did the New York session, did it extend out and go in the next 3-hour window? Did it make new highs? Or did it go down lower and make new lows? Or did it trade to one side or the other and then pull back into consolidation? Because in that rollover now, in that next 3 hours at the beginning of the day, they may stop hunt the previous day's low or break out of the range. So now we have a market that might be working the low, pulling back, and then starting to work the high in Asia for a move back down to the low of the previous day. Each 3-hour window will have information for us that we're either going higher, or we're going lower, or we're pulling back and going into consolidation. Now, when we head into the next session, for example, if we pull back into consolidation in Asia, now we wait for Europe to either break to a new high. So now we want to know, is the market breaking out to trend, or is it breaking out to do a stop hunt? And that's where we come back to our 1, 2, 3. Does it go to the high in 1 bar, 2 bars, 3 bars in 45 minutes? Again, this is where we can get our double top, or an M pattern, or a 2-push double bottom. We might even get a 50 pip stop hunt down to the low of the week if we're not already there. That's a very common pattern. We saw an example on the pound yen last week where they extended the range for 3 hours, 50 pips, went into a 4-bar consolidation, and then extended it again in the next 3-hour window down to the low of the week for a 100 pip move down to the bottom of the week. 3 hours, 3 hours. Now that third hour was 1 hour sideways and 2 hours down. But then it reversed at the New York Open for 50 pips, bang, right off the bat, right at the market open. And again, just to reiterate, 915, 9 p.m. New York, 1 a.m. New York, 5 p.m. New York, 5 a.m. New York, 9 a.m. New York, and again 1 p.m. New York, rolling around the clock. These 4-hour windows, yes, the 1 o'clock candle is 1 hour before our 12 candle window, but there's a great example again on Friday on the pound yen, where at that rollover the market gave a hammer, a bear hammer, for a sell signal right at the opening candle of the 4-hour chart. So heading into our 12 candle window, we were already in a market that had been sold. So we want to be selling. It went into consolidation, gave a pin hammer at the end of the 4-hour window of Asia into the 50 pip move down. Then it pulled back and gave another pin hammer for a sell-off at the end of the 12 candle window in the US session. So these are all the same. The market opens, the 12 candle window, and the 915. They all mesh in together. But it's important, that concept of 915 was for you to understand that the market, if it's going to make a move, when those 3 time frames are lined up, has the energy to attract other time frame traders to carry that momentum through for the continuation of all those time frames moving together. But this high-low concept is really important. Monday, Tuesday, Wednesday, if we have our high or low in for the week and the market's pushing higher Thursday, we could have a big sell-off on Friday. But that all depends on the pattern that the market gives us in our US and Asia, London transitions for each session. So if we're up high in the market in Asia, we talked about in that 3-hour window, in that second 3-hour window, does it extend out and make new highs? Well, obviously we're now in a different scenario. Does Europe take that and make it higher? Does it pull back in and hit it again for a sell-off back down? These are the types of things that are really important to understand. So we're going to go through some chart examples, but if you start to see this, you'll be able to see right from the beginning of the day and form a bias for the Asian session, for the Europe-London session, and for the New York session. Each session, if not at least every single one, there's one that will definitely give you 50 pips. Sometimes the pound Swiss, the pound Canadian, they may trade, they might tighten their volatility, and other days they might explode out, like Friday with the pound Swiss, a sell high scenario, it dropped 100 pips back to the low of the week. Very important. Now just to talk again a bit more about trade management, I took a trade on Friday. I talked about this last week about putting my entry in, putting my stop in and my profit target, and walking away from the screen. And great example of a market that just moved its 50 pips, hit the target. I wasn't at the screen. There's nothing that I could do to change the outcome of that trade one way or the other. Could I have gone to break even? It doesn't matter when the trade is doing what it's supposed to do. If you're chasing that trade, they came back right away as soon as they hit the 50 pips and stop hunted it and made it appear that they were going to go all the way back up to the top of the 50 pip box. But they didn't. They came back 2 bars, went into consolidation, gave another bear hammer, dropped it down, and moved it another 50 pips for 100 pips total move before they came back in the US session. So it's important for you to know your trade management planning ahead of time. When are you going to go to break even? If it was a 100 pip target, when it moved 50 pips, if the price action cleared into the next box, I would definitely move my stop to break even. Do I want to trap profits? It depends when we come back to timings. Have I been in this trade for 3 or 4 hours and it's only gone 50 pips and we're heading into the New York Open? I'll be paying very particular attention to the price action around that level because I want to take money off the table. Or if I'm going to break even, I want to know that I've got a bigger profit target in place than just my 50 pips. Just little things that, again, are really important because, as you know, if you've been following long enough now, there's a lot of things that will happen in live time that are designed to shake you out of a winning trade. And we haven't gone into a whole lot of depth about the review process, but again, there's some things I take for granted that I'm assuming people are doing. I'm getting a lot of questions, and my challenge for you, my homework for you, is turn one chart into 10, and then I follow 6 pairs. Every single day, I make notes on every single chart for the day for all those pairs. So again, six pairs. There's 3 sessions. That's 18 potential trade scenarios that you can learn from every single day. Don't just take one and make a note and put it in your file. Accelerate your learning. That's 18 trade scenarios that can be studied and learned from, applying these rules to every single session to learn something. The timings, the levels. 915, there was 3 trades on 1 pair on Friday. Just on Friday alone on the pound yen. Learn from those. 12 candle window at numbers, 50 pips. 3 sessions. There's always more to learn. But you need to be practicing that in terms of the mindset of how you would have executed that in live time. Which is partly why I emphasize put your entry order in, put your stop in, and a profit target, and a time constraint for either assessing the trade, cutting the trade, exiting the trade, if you're not already at profits or if it's not behaving as it's supposed to do. But sitting at the screen, staring at it, isn't going to change the outcome of the trade. And don't get me wrong, there's nothing wrong with watching that. But also, it's important sometimes to go away from the screen so that you don't sabotage that trade yourself. And then obviously improving, monitoring the results, monitoring that you're actually following your process. You can tweak this however you need to be. I'm trying to simplify this down to the easiest to understand situation every single day in live time, no matter what the market throws at us. We're going to have a high and a low of the week. We're going to have a high and a low of the day. We're going to have other sessions, highs and lows, to know if we're inside of one of the previous sessions, highs and lows. Makes it easy to determine where the stop hunting is going to occur. Or are we at numbers? But most importantly, make the process your own and own it so that you can duplicate it and scale it up in size. Make it so simple that you can repeat your results. You can identify what's happening in live time to know that it's either a sell scenario or a buy scenario. And again, just keeping it really simple. Big picture. We'll go at some examples again about the Monday, Tuesday, Wednesday, but 1, 2, 3. First 3 hours of a session, first 3 days of the week. It's really important. Those are potentially the highs and lows. Now, if you can understand that for each session, if they extend out and take out one of those highs or lows, now you know that they're either dragging you down for a buy low scenario or a sell high scenario up top, or it's a breakout continuation in a trend. And again, that comes back to assessing your structure and knowing where the other previous sessions highs and lows are. So if you're inside of a previous session's range and they break through a level and consolidate under numbers or at numbers underneath of the high or the low of the previous session, chances are they're going to do an extended stop hunt to a previous session's low or the low of the week, or if you're inside of a previous week to that low of the week. And again, we'll go through some examples. Align your actions with your beliefs. You have to think and believe and have the confidence in your skill set through deep intentional practice and execution, not only in practice time, but in live time. So remember what we talked about, the high and the low. If they go into the next 3 hour window and they extend one of those borders out, then again, we wait for the next session to either have a sell at the high. We could be at the high of the week. We could be at the high of the next day. All those little things. But it's really important every time a boundary is broken that we reassess that, especially with the timings in mind. 1, 2, 3, high and low of the week. 1, 2, 3, high and low of the day. 1, 2, 3, high and low of the session. So we want to know, are they working the high and extending that out for a sell high off of numbers for 50 pips back? Who's in profit earlier in the session? Is there somebody in profit? Or have they come off the low of the week on a stop hunt from the opening of the day to reverse it back long for a trending day? Little scenarios. We'll look at some situations on the examples. Each week, print off all your charts, all 6 pairs every single day. Accelerate your learning. Take one trade and turn it into 10 and learn from it. Mike Bellafiore talks about this in the playbook. Keep things simple, but scale up your learning, accelerate your learning, and then turn it into performance time. Hopefully you got some value from that today, traders. We'll look at some examples now. Keep it simple. Review 1, 2, 3. Again, 915, the market opens, the 12 candle window, they're all morphed in together. That's all one thing. But the 4 hour, the 1 hour, and the 15 minute, when they roll over together, can give us a lot of information either for a trade entry or for if there's already a move in place that we want to have a bias towards entering in along with that momentum. Stay disciplined, stay focused. Have a great trading week, and may the markets go with you.
Hi traders, it's Stacey Burke from Stacey Burke Trading. If you haven't done so, please head over to my website at staceyburketrading.com. I create updates on almost a daily basis, and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, The 7-Step Daily Routine for High Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined, and may the markets go with you.